Hello and good morning. I welcome you to the morning meeting today on Friday, the 16th of March 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers. So we want to have a look at the markets, at the market opening. So in fact, some technical issues at the Eurex in the morning. You may have seen that here at the JFD Brokers, for example, you had the 7-point spread you usually see over a night. That wasn't because the LPs didn't want to quote the DAX accordingly or something, but because there was no reference market open. So the Eurex started, in fact, pricing the FDAX, if I'm not mistaken, around 10 a.m. German time. That was around 2 hours after usually the market starts here. And so that was the main reason. That's one of the main reasons why it's very difficult to formulate a trading setup for today, even though I tried it. And in fact, I got lucky and it worked out so far for the German audience. Nevertheless, I'd suggest to be really careful. Today is the triple witching day. It's in Germany, by the way, called Hexensabbat. It's like the day when the futures and options here expire. You usually get to see some erratic price moves up and down, and not really knowing why this happens is usually due to the fact that big market players try to push the market in one or the other direction to see their bets, let's call them, expire with a profit. So usually it's mainly due to the option markets and option strategies. We don't want to go into further details here, but all in all, the market behaves in a very, very strange way, and that's one of the reasons why people refer to witches here, which are doing stuff, let's say, which is pushing the market in one or the other direction. That's one of the reasons why I'm, in fact, really careful myself. I myself also step back from current positions. That happened yesterday already, and I was right here because my system would have been short, and usually I intervene from a discretionary perspective. Nevertheless, there was never really pressure from the upside here, there was no selling pressure happening. But the market instead just pushed higher, and especially rose here towards 12,400 points into the close of the trading day. Then also today, the system would be short, and I stepped back from it, mainly due to the fact, not just because of the Eurex, but mainly due to the fact that I somehow doubt that there will be so much pressure building, at least not before 12 p.m. GMT. That's when the options and futures expire then. Probably it happens right after, and then the market will sell off from there. But right now, the decision does not look that bad in all. You can see that the market is clearly eyeing 12,400 points. The idea I formulated for the German audience was to probably take a long position against 12,370 to 12,380. This is here retest after the market broke above the highs from yesterday. It was a retest of these highs. We're still trading above the exponential moving average 50 on a 5-minute time frame. This is usually a good trend filter showing that the overall advantage can be found on the upside, and long positions should be favored. Now let's just see whether there will be so much more pressure on the upside. Probably there will be kind of a cap here around 12,400 points, because short-term traders are betting that the market will expire below this level. If we push above that, if this idea is correct, then probably there is a further chance to see a squeeze on the upside, which could probably push us towards 470, 500. Chances are, I think, less than 10%. And that's it. All in all, nothing more to add here for the DAX. I think the picture will be clearer post the expiration today, respectively. Also then with the start into the next trading weekend. There, I want to show you something, present an idea. If you look at the daily chart, what you can clearly see is that the market is still below 12,600, 12,650 points, and this is a bearish sign. So usually you expect the market to be in the hands of the bears here, even though there's obviously some consolidation, let's say, or at least you can see that the market obviously losing momentum on the downside, and instead built such a bearish divergence and is now trading back towards here 12,000 and 12,600 points probably, and it's probably breaking the structure. So all in all, probably long positions should be favored. There are two things I'd like to mention here. First is that from a technical perspective, I consider the region around 800, 850 points here, this red box, to be a quite significant resistance zone on the upside. So the risk reward for long engagements could be not that attractive, let's say. That's the first thing. And the second is that I think that their chances increase that over the next days, 2 weeks probably, tariffs here from Donald Trump, the Trump administration, could become again a topic, and especially a topic for the DAX here. The main reason is that if you carefully watch at the communication, currency manipulation, China, current account, for example, all this is a topic here. And the interesting thing is that if you look at this chart, the biggest currency manipulator seems to be Germany, in fact, not China. And therefore, it's very easy to run such a chart here via trading economics. It's completely for free. What you can find out is in blue that current account to GDP, Germany is way above China here in this case. So the main reason why Germany can profit enormously here from a current account perspective is this is due to the weak euro. So there have been many times we mentioned that the weak euro is something which is positive for the southern periphery here, but never eurozone southern periphery, but nevertheless, especially for Germany. Germany could cope with a euro which is significantly stronger than the current exchange rate here, but profits enormously from a weaker euro, which is weakened from the ECB here, and mainly to support the southern periphery states here. So it wouldn't be such a big surprise if Donald Trump, rather sooner or later probably, comes out and starts to attack Germany here, which is then something which could weigh quite heavily on the DAX. And this could become a topic very, very soon. And I'm not saying that it will happen next week. Nevertheless, it's something to keep in mind here, and where chances are enormously high that that probably this will then result in a sharper drop on the downside, and where we won't make it back above 12,600 points. So definitely be aware of that, and be really, really careful. So why I mention this is especially because probably some people out there plan to take long positions in the DAX and are probably not working with stops. So being wrong is not bad. I mean, you just take the chance, you see whether it works out or not, especially if you're working with a positive expected value. Nevertheless, make sure that you dump the position in the moment you just see things turning sour and not moving out as you expected them to turn out. That means working with a stop here is crucial in such a moment, because if such a trigger event hits, like Trump mentioning tariffs again, and especially eyeing Germany here, then this could weigh quite heavily on the DAX and result in a sharper decline, which could easily bring the level around 12,000 points in our focus again. So definitely something to watch for, and to not necessarily worry about, but nevertheless something worth mentioning. And everything below 12,600 points on top of that, and everything below the exponential moving, simple moving average 200, this is this yellow line, should be considered from technical perspective at least neutral to bearish, if not bearish. That's also something which could weigh even more on the DAX here and put some pressure once we find an external trigger event then. So now we're making it above 12,400 points. Let's see. Again, if there's some games going on right now around 12,400 points, well, probably we'll see a sharper push higher here, something to definitely worry about then. not to worry about. If you're long, you're really happy. But nevertheless, the thing is that it could be a quite brutal squeeze where it becomes probably even more interesting to be more aggressive with your stop once we reach the region around the current weekly highs around 12,470 to 12,500 points. Okay, that's it on the DAX. Let's have a look here at the Euro, even though that's not very spectacular what we get to see here. So it's still very, very choppy. We can stabilize around 123. Well, let's see whether there will be an attack and push towards 2270, 2280. The thing is, if we push below that level, we are still choppy sideways. Yeah, why? Well, because everything between 2170, 2220 and 2540, 2550 here should be considered neutral. And even if we break below that level, eyeing this region here, we only probably get to see a test of this lower range here, and that's it. So all in all, the picture in Euro USD is not that spectacular. Dollar Japanese yen is more interesting, I think, based on the fact that here, as you can see, dollar Japanese yen currently is eyeing the region around 105.50 again. Very interesting, because if we make it below that level, I think there's at least, for short-term traders especially, which are also facing some backwinds here. So trading with an advantage in this case, if you're on the short side. I think dollar Japanese yen is neutral, yes, but with a clear bearish touch here. Short-term traders probably eye with a break below 105.50 at least 104.50, probably even slightly lower 104, this region. And midterm, this is probably then the starting point of a move lower towards 100. And then things are getting very interesting again, because what has been a topic in the past, and was especially 2016, was that probably the Bank of Japan wants to avoid the dollar Japanese yen to drop below 100 again. With this tariffs discussion, let's say, protectionism, and the current politics here, or trade policies, which are I'm missing the word here. So what's this? The trade policy favored from the White House, let's say, that this could get really interesting here also. It's not a topic yet, but could become a topic. It would be really, really interesting to see what happens with dollar Japanese yen, and also the rhetoric here around this level if we move towards 100 again. Okay, that's it on dollar Japanese yen. Probably pound sterling USD is probably interesting. Some might remember that on Wednesday I started to talk about this region around 139, 139.30. I started to talk about this region as a potential long trigger. I think it's definitely noteworthy that we currently pushed against this level and saw some demand coming into the market. Nevertheless, we have to make it above 140 to really forthright this positive structure after the break above this falling trend line here. If we break above 140 again, if we can make it about this level, next target can be found at 140.70, and then above that 141.30, around 41.50 probably. So in fact, pound sterling USD is way more attractive right now as Euro USD, for example. And again, 140 could be the trigger for further gains than here on the upside. First reaction is very positive. Now question is, can we make it above 140 here? And in fact, that's it. So nothing more. Probably final look at gold, but the problem is that I have nothing more to say about gold than what I've already said in the past here. Gold is still neutral. My key level on the upside, short term, stays 1,340, 341 USD per ounce. If we make it above that level, it's further room up to 360, 365. On the downside, it's 1,290, 1,300 USD. Which is probably giving a way more attractive risk reward, and a level, even if we drop to this region, I wouldn't consider bearish, but consider it to be probably extremely bullish then, because it's getting such an attractive risk reward. I think things turn sour only if we go below 1,230, 240 USD. One reason I doubt that, by the way, I just remember that I made 1 second. Let me just see whether I can find it here on the other screen. I seen a very interesting chart yesterday. It was a retweet from my end. Here, that's really great. Very, very interesting. It's from Jamie McGeever. It's a Reuters journalist. Hello. There we go. As you can see here, the 2-year, 10-year yield curve keeps on dropping, and currently it's only 25 basis points. As you can see here, I think this is I'm not sure, the lowest since January here, and it flattened 25 basis points in a month. This is usually a first sign of a potential recession forming, and usually a bullish sign for gold. So with this in mind, and gold currently not reacting to this, nevertheless keep gold in mind. Long-term positions with a break above 360, 365 could turn out really, really interesting, because with such a break, we won't look at this chart right now, but you can see on a weekly chart a wedge forming here. If we break above that level, there's the target probably around 1,600 to 1,700 USD per ounce on the upside. So it could be that gold becomes an outperformer if such fears around the US recession start to form here. And yeah, that's it from my end for today, for this week. Happy trading. Watch your stops for the rest of the trading day. And talk to you again on Monday, 10:30 a.m. GMT, 19th of March 2018. I definitely look forward to it. That's it from my end. So take care. Have a nice weekend. Talk to you again on Monday. See you and bye-bye.